Win Studio. Well, I just can't leave out our annual sponsors right now that we're talking about them. So our annual tie partners, Platinum, PTU, and our gold partners, Bebo Technologies and Talwar Associates, followed by our bronze innovation partner, Signicent, and sustainability partner, Hardeep Group, Xenon Stack, STPI, and our technology partner, Cybrave. That was that, and food is the best part of any day, right? So lunch has been opened. Why don't you go grab a quick bite? In the meantime, we'll get ready to welcome you back at 2:30 sharp, right? See you soon. It's a midday break. I think we all need some energy. Lunch has been laid out and it's waiting for you. The reality of the PEVC ecosystem and the volatile business environment quite well with these lines. You never know what's on the next turn, right? So a very warm welcome to this one on Has There Been a Paradigm Shift in the PEVC ecosystem? And I would just like to take the time to introduce our panelists for you. Well, this is a panel of trailblazers, let me tell you that. Beginning with Ms. Rupan Aulak, who's the Managing Director of Pi Ventures. Now she has 15 plus years of venture capital, corporate development and technology put together. Now an investor, prior to that she worked in deep tech as a technologist, and currently she's an MD at Pi Ventures and she invests in early stage deep tech startups across diverse sectors. Ladies and gentlemen, please give it up for Ms. Rupan Aulak, Managing Director, Pi Ventures. Can we have you on the dais now? Next up, we've got Ms. Padmaja Ruparel, and she's helped co-found many of the relevant institutions, including TIE NCR. That's wonderful, I think, and she's also the first executive director of TIE Asia. Co-founder of IAN and founding partner of the IAN Fund, she's built India's largest platform for seed and early age investing. And I absolutely have to tell you this, that she's the co-chair of Global Business Angel Network. She's helped found angel networks in neighboring countries of Sri Lanka and Bangladesh as well. Ladies and gentlemen, please give it up for Ms. Padmaja Ruparel, founder IAN. Abhi to lunch kiya hai na, to energy hogi. We need to spend that. Please, a louder round of applause. And next up, we have Mr. Arjun Rao, who's General Partner, Special Invest. Now, he spent over 15 years in the technology and internet startup ecosystem, and his journey began with Yahoo and later IBIBO as product manager. Now, the entrepreneurial bug led him to start an edtech and travel tech startup called TravelYari, and that has gone on to achieve 40 million in revenue, and they've raised 12 million in seed, Series A and Series B funding. And he's also lead strategy and fundraising in all phases of startup life cycle. Ladies and gentlemen, please give it up for Arjun Rao, General Partner, Special Invest. Well, our next panelist is quite exciting. His venture Innovate was born out of his sheer love and thirst to promote entrepreneurship in the country. This was back in 2016. National University, founder and CEO, Innovate Co-working. And now, for our moderator.
Good afternoon, everyone. I know it's post-lunch and really toughest session to hold the audience on, but we'll try and make it relevant from investors' point of view, from startups' point of view, look at the post-COVID, post-IPO startup stage of investments and how the scenario is changing. So let me start off with Padmaja first. Padmaja, you've been the senior most amongst all of us sitting here in the ecosystem. So if you can quickly run us through the last few critical changes in the ecosystem from early 2000 to 2010, 16 and now.
First of all, thanks Amit, and congratulations to the TIECon committee and TIE Chandigarh. Awesome event. I'm glad to see everybody in person, first of all. I think that's the big thing that's happened. So Big hand to all of you. So just as we were getting into lunch a little earlier, I was mentioning to Rupan that when we started IAN, we had 30 deals per year, right? That was the kind of business plans we were getting. We were struggling to figure out what to do. And all of them were service-based, headcount-based deals. And before that, when TIE was established, there was nothing called startups. So over the last 2-3 decades, I think the ecosystem has completely changed. But more importantly, in the last 6 to 7 years, there's been a spotlight on startups. And no doubt, I think the government has put a spotlight on it. We are seminal to the budget. We are seminal to the rhetoric of the countries. Literally how we are building it. So I think we are now seeing startups in a very different light. Before I even get into talking about investing, I think the most important thing that has happened is we've got very high quality talent of promoters that we are seeing. And year on year, we have 2 people on either side of me who are focused on deep tech, and they'll be able to give you a better idea. But at least from my perspective, I think we are seeing extremely highly qualified technical entrepreneurs building, and this was not there earlier. So I think that's number one shift that has happened. The second shift I think that has happened is valuations have been a part of the conversation, and 2008, 2015, and I hope not very soon we will again see some conversations on valuations which will be otherwise not so interesting. But the reality is those conversations are also important. They help companies to grow their revenues, but they also help them to become strong and valuable companies with paths to profitability. And I think from our perspective, from IAN's perspective, this is very important, that we feel is critical to build such companies. And the third piece, I think, is the investing business. When IBCA started, we had 23 million of VC money coming in the country. I think we've gone way beyond that. Year on year, quarter on quarter, we are just jumping into billion numbers. And the big thing, because you mentioned IPOs, I think the big thing is we didn't know what was a unicorn. We didn't know that, tech startup companies built on this kind of models would actually go IPO. So I think the whole landscape has changed, and a lot has happened because of the entrepreneurs themselves. And to me, I think we are the third largest startup ecosystem, we are the fastest growing, but we are on a path to become the global hub for entrepreneurship and innovation. I think that's what I see.
Great, thank you. We'll come back to valuations, governance, and also for the people who are sitting here, return on investments for investors and how that pool can be increased. Ritesh, you invest in early stage companies and quite a young startup sitting here. Valuation is a challenge at that stage when there's not much of a traction, post-validation. How do you deal with that as an investor? Do you stick to 8-10%, or do you, is there a formula that you have, or do you go by the sector or the gut feeling that you might have?
So first of all, good afternoon, Chandigarh. I think this is one of the finest events, at least I've been a part in the past 5 to 6 years, and I've gone to a lot of events worldwide. So massive congrats to the entire TiECon team for actually pulling this off. In spite of pandemic. Now, when it comes to valuations, sir, I'll tell you a very interesting thing. While ma'am said a very interesting point that we are the third largest ecosystem in the world, we are still the 22nd ecosystem when it comes to ease of doing business for startups in the world. We are also an ecosystem that is maturing. We are also an ecosystem that is massively overvalued. We are all very fortunate. People sitting here, people sitting there, all of us are fortunate that we have the ability to actually get massive valuations. But there is a responsibility on the founders, on the entrepreneurs to ensure that they frugally build their startups. One of the key things, and in my opinion, we are going to see a startup winter coming very soon. A lot of capital has been deployed on a lot of young founders who may or may not be able to manage capital. Raising $10 million, that's 77 crore rupees. I asked, my dad asked me that एक बच्चे ने $10 million रेस कर लिया, वो कहते मैं जिंदगी में इतना पैसा कभी नहीं कमा पाऊंगा. Now the thing is that you need to have the skill of managing and deploying this 77 crore rupees. The challenge is our media never highlights, and this is something I always tell to your stories and Ink42s of our country. They always highlight कि इसने इतना पैसा रेस कर दिया. They never highlight the North Stars which we should highlight, which is NPS किसका ज़्यादा अच्छा है, growth किसका अच्छा हो रहा है, revenue profitability, and the best metric in my opinion is revenue per employee. ये कोई बात नहीं करता. We just celebrate fundraisers, which is the worst part. Celebrating fundraisers like आप दिल्ली से जयपुर जा रहे हो और आपने बीच में कोटपुतली में तेल भरवा लिया. You will not celebrate that until you reach Jaipur. You have not successfully completed the mission. So the most important thing is, in my opinion, is that don't worry about valuations. Build the right value, and the most important thing is your customer. Customer से बड़ा दुनिया में कोई नहीं है, ना investor है ना आप हो. So just make sure that, and a lot of things which founders do is they are not focused. A lot of founders, early stage founders, they try to build multiple things. I meet founders who say I'm building 4 companies, I'm building 3 companies. I don't buy that. I feel you need to focus on one company and give your blood, sweat, tears into it. Give 48 hours a day into it. And at the same time, don't worry about valuations. Get the right value, build the right PMF, and once your PMF has actually structured it out, you go towards the right investors who are patient. And I think value creation, the challenge with the country is, even हमारे प्रधानमंत्री यूनिकॉर्न वर्ड पे ऊपर तवज्जो देते हैं, which is wrong. यूनिकॉर्न तो आज मैंने आपको कन्विंस किया कि महावीर जी आप मेरी कंपनी में अपना 100 करोड़ डाल दो और आप 7% या 8% का स्टेक ले लो, मैं यूनिकॉर्न अगर बन जाऊं उससे. दैट द रियल वैल्यूएशन कम्स बाय द इन्वेस्टर, बाय द रिटेल इन्वेस्टर. जब कंपनी IPO जाती है, अब हम देख रहे हैं वो जोमेटो जो 160 पे था वो 70-75 पे आ गया. दैट इज द रियल वैल्यू ऑफ अ बिजनेस, एंड इट माइट गो फर्दर डाउन, because we need to understand businesses are done not for scale and technology but for profit. So I think in massive changes, and this is good by the way, that we are entering into a mature ecosystem where we will be valuing profitability, and that is the most important thing.
Great. So basically, fundraising is just a journey. It's one step at a time. It's not the ultimate goal, and valuations come and go up and down, which is fine. So Arjun, obviously once a company has been invested in business for a couple of years, some metrics, some numbers, and you as an investor come in at pre-series A or earlier than that, do you see a change scenario now? Are you skeptical as an investor? One, I don't understand valuations is more mathematics at this point of time and more formula driven depending on the sector that it is in. But are you looking at everything with a microscopic lens at this point of time? Change scenario?
Yeah, I think we're living in very interesting times. We've had an amazing run in the last couple of years since the blip of the start of the pandemic, right? And digital adoption and therefore use cases, both for consumer and for business use cases, have just exploded, and that has benefited a lot of companies, a lot of startups, right? And maybe, just maybe, and we also ourselves might have been guilty of, in that acceleration phase of wanting to deploy too much capital quickly in a very, very competitive market, may have paid less attention to certain fundamental important metrics that a company needs to hit at any stage that it's getting invested, right? Let's say our stage, which is usually pre-seed and seed, we want a great team, we want an MVP, we want a solid research and idea on which is the market, something that Ritesh mentioned. Do you understand your ICP, right? Are you doing it one size fits all for many people, or are you doing it for very focused customer segments? We should be, as investors, our responsibility is to evaluate a lot of these. Probably in the last 2 years, time because of competition, it's not always been possible. So I would say we would take typically 3 months to do a deal, about 3 years ago, 2 years ago. And in the last 1 year, it's been so much pressure to close the deal in 4 weeks, sometimes 3 weeks, sometimes even a week, right? And so we're also to blame. So when the tide turns, which we're all saying it might, or it is starting to happen now, we'll all go back to the fundamentals, which means for entrepreneurs, you have to be a lot more prepared, right? You have to know your customer, you have to know your unit economics, you have to get some validation before you probably can raise meaningful capital, right? I think we will revert closer to the mean, if not the old mean, and that will be very, very valuable, and we need to play that role again.
So I understand, and I'll come back to you again, and you can jump in on after he answers that. Of course, IP and R&D for a deep tech company that both of you invest is very, very critical. And that does add value in terms of the investor's ability or the startup to scale up. But when there is a deep tech reaching out to consumers on application, is top line more important to you at this stage, at your stage and then your stage? Or is it the bottom line equally important? What do you look at? Or is it core strength and ability in IP? You go ahead.
First of all, really happy and proud to be here. I'm actually from here. So I'm so happy to see such a large crowd, which I have to be honest, I didn't really expect. So hats off to you guys. So regarding your question, I just want to, I think I second everyone, whatever has been mentioned so far. What we need to understand is that, and I'll come to the part that you asked in a bit, but what we need to understand is that starting something, founding something and building a company out of it is not like a 1 year, 2 year kind of a thing, right? This takes 5, 6 years. And that's not just true for founders, but also true for VCs, right? So all these swings of the market happen, but we just need to make sure that we have an eye on the bigger picture and not get swayed by these things. Now coming to how we look at companies, and this really depends on the sector. And being a deep tech fund, we look at multiple sectors. In fact, we are sector agnostic, but what we look for are disruptive technologies, for example, AI or even crypto or these kind of technologies that are being used. Considering that we are early stage, we generally focus on the core of the business, right? So what is it that the company is trying to solve is the biggest thing that one needs to look at. So what is the business case, right? Second thing that we look at is the solution that the company is developing. Is it run-of-the-mill solution, or is it something that's truly differentiated, which over next 2-3 years is going to give an edge to the company, right? The third thing is the founders, right? How strong is the founding team? It's a very, very tough journey. So we are always looking for founders who have resilience, plus also have a very special insight about the industry that they're targeting. What is it that they know that others don't know, right? And how well they can execute. So these fundamentals are always looked at irrespective of whether we are on a high or a low. Second, Arjun's point that of course how much time we get to evaluate all this can vary. But typically it's about 4 to 5 weeks in which we end up making decision unless it's a competitive deal. Coming to your point about top line versus bottom line. So in early stage, we don't have the luxury of looking at bottom line, right? You're still discovering the market, you're still trying to reach out to the customers, and customers don't start paying from day one, right? Especially if you're building a business in India, for India, right? So bottom line, early on doesn't make sense. What makes sense are the unit economics. So today you might not be making profit, but are your contribution margins positive? Will they be positive in steady state? Are your gross margins going to be positive in the steady state when you start scaling up? Those are the things that really matter. In fact, even top line in early stage is a little bit of a high ask, right? Because early stage companies, and again depends, right? D2C, yes. D2C, in that case, you need to show some revenues. But then what becomes important in D2C is that there's always this gap between getting your first few customers, getting some traction, and then actually scaling up. So therein you have to see whether whatever is being built by the customer, by the company, is this a short-term kind of a blip that you're seeing from traction perspective, or is something that is sustainable? So those are some of the things that become important in evaluating these kind of companies.
So, well, all three of you have done a cycle full for a fund. Onto your second funds, all of you, I as an LP, or you as GPs, and many people here who are your prospective or positive LPs, what are we looking at in terms of return on investment to an early stage funds as an LP? What is it that we should look into? Why should I invest in your fund and not your fund, or vice versa? What education would you give me as an investor that I should be looking out for in a fund? Because there's a plethora of funds being launched. I think it's a very crowded market, and ROIs and IRRs are all over the place. One good company takes someone's IRR better, but does not mean that he or she will for that fund. So, what are your thoughts on to an investor, Padmaja?
So, good question.
I know. I like to throw googlies.
So, no, when I agreed to the session, I was prepared for googlies. We know you. But I just want to, before I respond to your question, if I may, I want to add something which she said and he said, because it's very important. I think one of the things that we are looking for at IAN is for us, whether it's the angel network or whether it's the fund. First of all, 70% of our bet is on the founder. And apart from what they said, that the founder's domain expertise, ability to understand what solution he's building, I agree with all of that, seconded. But I think we look for something, two more facets. One, is he or she a leader? Can they build this company without our money? That is very important for us, because then, and we've all gone through 2 tough years, right? The world changed. It is the entrepreneurs who are resilient, who are persistent, who are dogged about their business, they've survived. And we don't talk about it, but there are many businesses that have not survived COVID. So I think one thing that we look for is that. The second thing we look for is value system. Okay? And I'll explain this through a example that happened in our setup. We were looking at 2 deals. One deal, it was at the angel level. The pitch happened. The entrepreneur was given a term sheet, signed. I was going to Bangalore. He was going back to Bangalore. I boarded the flight. I found him sitting in business class and I was in economy class. And the first thing I did as I sat down is to say, cancel the term sheet. Because for us, it just collapsed while you were raising money, because it is not frugality that you're looking for, it is the overall thinking of capital efficiency, of taking the buck much further than you can. There was another entrepreneur. Our office is in a very nice complex which has a couple of very high-end restaurants, and yes, every weekend it's packed. So many times, one of our partners went there, I was there, we went for a drink, and we got these 2 entrepreneurs to say, "Yahan aa jao, mil lete hain yahan." These 2 scraggly looking guys, young guys, who were pulling their stroller, they were very uncomfortable in the restaurant, but we said, "Come in." And literally sat down and said, "What would you like?" He says, "Sir, yahan kyun, office mein chaliye na, sasta padega." And I think within the 4 of us who were sitting there, there was almost a 40 to 50% agreement in our minds that we will go ahead with this, right? And we were meeting them for the second time. So I think that value system, these kind of things shows up the value system, because founders are CEOs, and the CEO's job is not only to grow the business, but he is responsible for all stakeholders for his company, be they investors, customers, employees, whosoever. So I think that is something we look for. To your point, you're right. I think the good part of the industry growing, we have all types of VCs in the system. I think what is very interesting is if we look at something like IE, we've sort of built a track record, right? We've done almost 200 companies, 400 to 500 transactions. Every marquee VC or investor is sitting either with us or after us. So I think that track record is something which is very important for LPs to look at. The second thing I would say is like investors vet a startup, LPs vet the managers. That's as simple as that. So are the managers going to do this when the tough times come? Are the managers going to be, do they know each other for a long time because it's going to be a long journey? Are they going to be able to stick around? Are these people who can bring the world together? For example, at IE, we've got layers of people who work with us. Not only the team, not only the investment committee, not only the network, but the network's network. And we've completely morphed companies from being clean tech businesses to becoming med tech businesses during the pandemic. Right? In 3 months, we got them to create a design, put a ventilator together, and in the market landed it. Right? And their revenues are 4 times the valuation, so they are not raising money. Now that's the bigger problem. Now, how are we going to exit? That's a different. It's a healthy problem to have. So I think you cannot build businesses alone. You need an ecosystem around. And similarly, funds cannot give returns alone. The 2 or 3 partners in the IC cannot give returns. People have to come together, and the ability to get those minds together and engage, not only to get them there as names, but to get them to engage, and that engagement model makes a lot of difference. Because that is how companies will be born. That is how they will grow. That is where you'll be able to help the companies. Because each company has different needs and they have a variety of needs, right? How do you bring all that in? I mean, for a medtech company to get the executive director of Stryker, to get the CEO of a French tech medtech company, to get the best procurement guy in the country, to get the head of port of Singapore to help us during pandemic, I think that is something which is unique for us. And I think these kind of things, and these are just some, right? I can keep on this forever, which I'm sure you don't want to hear me. But I think you have to get into the experiences, the stories, the reason that they're doing this, the passion behind it. If you don't have the passion to run the fund, don't do it. I mean, it's as simple as that, because you can't do it like a job.
Got it. Anything that you guys want to add to what LPs should be looking out for?
Yeah, so our thesis is simple, that for LPs or generally for returns in this industry, whatever has worked in last 10-15 years is not something that will work necessarily now or in the future. So what we feel is that going forward we'll have more and more specialized funds coming in, which are focused on specific, let's say, areas, maybe sectors, or for example, funds that are focused on consumer segment, right? Or let's say fund like ours, a little bit of a pitch, but funds that are focused on deep tech. And when I say deep tech, these are essentially companies that are building strong IPs, which then very easily lend themselves to being M&A candidates in future. Right, so what we feel is that these specialized pieces is what is going to give you outsized return versus, let's say, a broader focus, a lot of funds like that. And the second thing I think, which is true for everything, is the people, right? So whatever GPs you connect with are the ones that you want to back, whether you actually relate to what they're building, and essentially people who are staying abreast with the times, evolving with the times, and are one step ahead rather than...
As hands-on as startups are.
As hands-on. So operator experience, I mean there are pros and cons to both, but operator experience, someone who can actually get into the trenches and build it up along with the founders. What value addition they actually bring to the table for their portfolio. These are some of the things that become important.
Got it. You want to add something?
Largely well covered. we are also of that opinion that there will be two types of funds, very large and diversified funds, then there will be specialized funds with expertise, and just like a startup means differentiation funds also. What are we good at? Why are we good at that? What are we doing specific deep research on? And that's why entrepreneurs will take our money and not somebody else's money. Because just the money isn't money. Right? The money coming with the expertise of a partner and a certain team, right, is what is attractive to today's entrepreneur. Right? Because there's so much capital available in a house and all things.
Got it. So before I go back to Ritesh and set us another googly for the three of you. Overreaching by investors on startups and governance issues within funds and within startups. Your thoughts?
I'll take a first crack at that. I think and this ties into the last part, right? When capital floods into an ecosystem, there is competition to invest in the best entrepreneurs. When that happens, one of the differentiations that an investor can show is that he or she or the institution is founder friendly, right? Now, founder friendly is supposed to be ideally extremely supportive of founders, act like a partner, act like one more co-founder, be helpful on opening doors and things like that. But sometimes the lines start getting blurred, and founder friendly could start meaning that you ask lesser tough questions, right? You don't keep a tab on how the business is running. You do not ask for proof of certain systems and processes in the company, right? You don't take a board seat, for example, right? And don't oversee, whether the house is in order, so to speak. So there's a fine line, and sometimes in very, very competitive ecosystems, when capital is abound, we let slip these fundamental things. And founder friendliness, in the name of founder friendliness, we lose keeping track of how is the company being run in a nice, legal, ethical fashion.
This is the ideal situation. I was referring to two things that just happened with two companies, one in Singapore, one in India. Is that an overreach, or is that a governance and compliance issue at the end of the co-founders? And I don't want to take your call is not to take a call on who's right and wrong. What is the balance, and how do I, as an investor, what should I be doing, or what should I be expecting you to do in this situation?
So, I think fundamentally, we keep talking about that the objective, the founder and the investor partner help to build a company. But the reality is, which we sometimes forget, is the founder's business is to build a company. The investor's business is to get return. Now, therein lies the checks and balances right there, right? Because as the founder builds the company, he's too close to the ground, he needs money, he's going to keep doing what he needs to do. And to be honest, even without realizing, taking shortcuts. Okay. The investor is exactly the person, and that's why you have something called affirmative rights, voting rights, right? That is why you need to be on the board, because that's where you are bringing in that clinical cold look to the business and telling the founder, hold on, buddy, you are overstepping. And it is not intentionally that he may be overstepping. It's just that he doesn't know, perhaps, that this is a compliance issue. That's, I think, the issue that happens in many companies. I won't comment on if there was an intent, that is, I don't know. The second piece, I think, which we as seed and early stage investors are responsible for is, just as you bring up good, balanced kids, you have to bring up good, balanced startups. Inculcating governance right in the beginning, that you must have board meetings, you must bring up the board agenda, you must have a certificate of compliance and everything done, you must have your ESOP right, you must have your HR. I mean, these are things that must become second, it's automatic, right?
Do you lay that out at the early stage, at the investment stage, that these are the things that you have to do? I mean, obviously, compliances are required, there's no question about it.
Yeah.
But corporate governance, board of directors, behavior, attitude, IP, IP meaning the market value or the goodwill of a company at stake, which gets jeopardized and it's challenging for the investors who've invested. Do you all do that also?
Yeah, actually, almost all our agreements are like way too exhaustive. In fact, founders don't like them to be that exhaustive, right? So we have a lot of checks and balances. And fortunately, unfortunately, we have DFIs also as LPs. So we are bound by even beyond corporate governance, like ESG kind of mandates. So, and I do agree with Padmaja that, as especially investors that are on the board, right? Actually, a director has fiduciary responsibility also to make sure everything is going well, without being overbearing.
So we as LPs,
But there is a conflict right there, right? What is a board director? A board director is supposed to be responsible for the company. But an investor board director is actually a nominee board director supposed to be looking after the interests of the investor. So that could be conflicting. And that's the interesting piece, that how do you handle that? Because ultimately you want the company to be valuable, both the founder and the investor. But yet there is differences. So I think to take a board seat, it is a responsibility. And I think I'm seeing this, that many board directors need mentoring from very senior board directors. And how do you handle these?
I understand it's a very, very tight rope walk and it's not easy because you have to be balanced between overreaching, over-pushing, day-to-day management and governance and compliance and vision. So I agree with that. So we'll leave it at that and let's go back to startups and enough of investor questions and let's go to sectors that we think are the future. And I'll start with EdTech, Ritesh. Always had a challenge with many sectors, EdTech, FinTech, AgriTech, Health Tech, overcrowded, but still there are thousands of ways you can solve a puzzle for education or healthcare, and you've been in the EdTech sector, offline, online competition. Many startups have started online things and now they're going offline. So the model continues to change and your growth model continues to change and reaching out to consumers is always a challenge. Where do you see EdTech in India? Is it offline, online, hybrid? Is it going to be strong future? Is something that you are very, very positive about? And is it something still that young startups sitting here should be trying to resolve?
So before I answer that, I completely agree with all of them on the fact that corporate governance is the center stone for anything that you build. And to do that, and I've made my mistakes, मैं तो डॉक्टर हूँ, मैं जब चालू किया ये भी नहीं पता था प्राइवेट लिमिटेड क्या होती है, LLP क्या होती है. I realized one thing, that before doing anything, ensure that you have a very good CS, you have a very good CA, and you understand, and you have a very good HR, make agreements. I think the most important thing is great companies with poor corporate governance will not yield good outcomes, but decent companies with extremely good corporate governance will help you make more or optimized outcomes for all of you. So I think that is something which is extremely important. Coming to your point on the sector, I always believe आपका passion किस चीज़ में है, and I go to a lot of schools, universities, and a lot of people ask me यार मैं passion कैसे बताऊँ? हम लोग मेरे से पेरेंट्स पूछते हैं कि पैशन कैसे पता चलेगा बच्चे का. मैं कहता हूँ जब टीचर वहाँ ब्लैक बोर्ड पे कुछ भी बोल रहा होता है, हम लोग तो सुनते नहीं थे, लास्ट सीट पे बैठे होते थे. उसके बाद जो पहले 1-2 पेजेस में ना हैंड राइटिंग बड़ी अच्छी होती है कॉपी में, लास्ट पेज पे जाते जाते डॉक्टर की हैंड राइटिंग बन जाती है. उसके भी लास्ट पेज पे जब वो बच्चा जो बना रहा है ना ड्राइंग्स, जब वो टीचर बकवास कर रहा है, पार्डन में वो टीचर बकवास इन द सेंस दैट जब उसको नहीं समझ में आ रहा, बिकॉज लेक्चरिंग इज अ वेरी रिडंडेंट फॉर्म ऑफ एजुकेशन. That is your passion. The whole idea is that our job, the job of our education system in the country is to unleash and uncover the passion of that person. And I am the right example here. मेरे को डॉक्टरी का बिल्कुल शौक नहीं था. मैं पंजाब से हूँ, खन्ना से आता हूँ, मेरे को मेरे माँ बाप ने फोर्स करके डॉक्टर बना दिया, एंड आई वॉज डूइंग अ जॉब एट गंगाराम हॉस्पिटल, एक दिन लड़ झगड़ के छोड़ के स्टार्टअप लॉन्च कर दिया। मेरे जैसे कितने बच्चे होंगे हमारे देश के अंदर who are not following their passion. So one of the key things which I would say is don't worry which sectors are going to be amazing. Obviously damn sectors are very important, but the most important part of living a life is living a life of happiness, and happiness comes when you find your purpose. Happiness comes, हमारा जो फिंगरप्रिंट है उससे 1 लाख गुना ज़्यादा सेंसिटिव हमारा ब्रेन प्रिंट होता है। जो आप सोचते हो और जो मैं सोचता हूँ बहुत ज़्यादा डिफरेंस है in terms of our passion. I think that is something which is so important. Once you start following your passion and then you tether it with the need of the customers, and then you build. See, raising capital is a byproduct. Raising capital, and the challenge is a lot of people who don't know about startups because of these media outlets tend thinking that raising capital is a big part of doing your job as the CEO, which is not. Your job is to suffice needs of your customers and to ensure that अगर आपने 7 रुपए लगा के एक प्रोडक्ट बनाया, कस्टमर आपको 10 से 11 रुपए दे दे। अगर आज मैं महावीर सर को कहूँ कि सर मैं आपको 10 रुपए का नोट दे रहा हूँ, आप मुझे 8 रुपए वापस दे दो, आप ये खुशी करोगे। मेरे को देख के आप बोलोगे रितेश बहुत बढ़िया आदमी है, तो मुझे 10 रुपए दे, मैं तेको 8 रुपए दे दूँ। ये 1 साल होगा, 2 साल होगा, 3 साल होगा, चौथे साल में आपके पास आऊँगा, अब मैं आपको 10 रुपए दे रहा हूँ, मुझे 12 दो, आप मेरे को थप्पड़ मारो, बोलोगे नहीं यार तू यहाँ से जा। So the whole idea is that we need to ensure the right unit economics and also ensure that investors, you should know why you are raising capital. Investors for raising capital from 0 to MVP, from MVP to PMF, your minimum viable product to a product market fit, and from a product market fit to actually replicating and scaling your business are very different. Try and raise capital at least at the MVP or at the PMF level. You will find the right investors.
Absolutely. So you did not answer my online versus offline competition.
I am a massive offline fan, and we are building, and because of my ulterior motive as well, we are building a university called Laksha, right? I think 25 minutes from there.
I missed the dinner, that's why I wanted to give you some airtime for that.
Yes. So the whole idea is that I believe education is an experience. आप किसी को ट्यूशन तो पढ़ा सकते हो, आप किसी को स्किल ऑनलाइन दे सकते हो, लेकिन the experience of education is peer learning. The experience of education is going to the library and adjusting with Homo sapiens. Adjusting with humans is the. अगर आज मैं जब छोटा था अपने पापा से पूछता था पापा बड़े होके क्या बनूं, 6ठी क्लास में सारे बच्चे आते हैं कि अंकल, एक तो मैंने कहा अंकल बोलना बंद कर, वो कहता है अंकल बड़े होके क्या बनूं। The whole idea is, my dad said a very good thing, कहते पहले अच्छा इंसान तो बन। The whole idea is education helps you in creating value systems. As Padmaja ma'am rightly said, जिसका value system ठीक नहीं है ना, वो देर सवेर 1-2 साल तो capital raise कर देगा, उसके बाद ना they will fall like a house of cards.
They will be eating at a fancy restaurant and flying business class. Quickly, because we have to go to audience, we're running out of time. 1 or 2 sectors that you are excited about in the next couple of years? Because dynamics change every year, so I don't want to go way beyond.
Yeah, biased answer. What we focus on the fund, bunch of deep tech activity happening from India. It's a start of a big revolution, in my opinion, for the next 10, 20 years and beyond. Right? We are primed. We have the talent. We have the ecosystem. We have big problems to solve. Within that, if you want me to pick, I will pick space technology. Right? I think again, I'm sure many in this room, many entrepreneurs and outside, inspired by what Elon Musk has done, and I'm sure we'll find many Elon Musks in India as well. Super excited about satellites, launch vehicles, information, data, all of that.
Space tech. Padmaja.
So for us, I think it almost echoes him. I think all the deep tech is going to become horizontal, and we'll have all the vertical sectors sitting right there. So we can continue to build businesses across sectors, but very, very sharply tech enabled. And I think the big sector which is waiting, and it has been waiting for some time, but I'm really hoping that it's happening, is I think AgTech. Because it's such a huge market, it's such a huge problem and a need area, it's waiting for solutions, and the more you solve, the more there is to solve. That's one of those sectors and critical to us. So agri is the...
Agri. Rupert.
Yeah, in my opinion, any applied use case of AI, so that would be across multiple sectors, but climate tech would be another one, and both on the software side as well as hardware side. EV design, of course, EV related, it's become a little crowded. There's a lot of work that can happen on the battery side.
That's another one. And I'm really passionate about space tech, just like Arjun. Yeah, these are, and plus, of course, let's not forget Web3.
Of course, Web3 with time and yeah, but
So I just wanted to add and announce it properly on this platform that we are very, very excited about healthcare, pharma, biotech, all of that. So next week, if everything goes right, we are launching BioAngels. So we are bringing together investors who come in from that domain, from those businesses, which can then engage with startups and actually bring.
I was actually surprised that none of you said biotech, and I was going to say why not biotech. So I'm glad you brought it up, and I think Government of India goes to Byrax and many others who've done a great job in moving.
So this is in partnership with the Department of Biotechnology, BioRac. So what we'd like to do is actually it is not, we're just helping it get it off the ground, but all the investors, all angel groups, VCs, corporate venturing, etc. Please join hands and make BioAngels happen, because I think it's really going to help the country's critical sector.
Okay, audience questions, a couple of questions, if any. If you want to name someone, name that person, or anyone else will take it. Yeah, go ahead. बिना माइक के बोल दे यार, पंजाब है.
Since you guys get a lot of entrepreneurs and we've seen a lot of progress happening in the entrepreneurship space and a lot of people getting very explosive growth in the recent past. But still, if we compare internationally, we are lagging behind. So since you have seen numerous founders in the past years, what are the few things that you would pick is what we lack? So is it vision, is it mission, is it drive? Execution, I believe, is not the problem with us Indians. Talent to hai hum logon mein thoda bahut.
We'll keep the questions also brief and the answers also brief. Anyone wants to take a shot at that? Advait, you want to do that?
I'll just highlight one.
Yeah, go ahead.
One point which is, I think you mentioned it, we are a country where in general we are technically very talented, right? Our engineering and medical learnings have been good, so I think that fundamental is taken care of. What we are probably not great at is storytelling and selling our vision and sharing our vision and having more people join us. And more people means you need to have the best talent, you need to be inspired by you and the mission that you're going after. You need investors to invest in you upfront, and then you need the customers also to back you in the early stages when you're building something disruptive. So I would say it is storytelling is the art that we can keep getting better at. You could call that sales and marketing, but storytelling is the headline I'd say we need to get better.
1, 2 words anyone wants to add?
Maybe global aspirations sitting out of India would be another one.
Okay, great. Anyone? Yeah, go ahead, ma'am.
Thank you everyone, and thanks for such an insightful session. I just have one very quick question. आप लोगों ने mention किया कि founders में क्या-क्या होना चाहिए, team में क्या-क्या होना चाहिए. How important is it to have a co-founder? Would you fund a solo founded company?
No.
That's not a question to be asked.
So let me tell you why. If you are a solo founder, right, from a purely investor perspective, and it should also be your reason, if something should happen to that founder, the company doesn't exist. And that's very high risk for any investor, because early stage, seed stage investors are anyway taking a risk, right? When there's not much on the desk, on the table, and they're still taking a risk. They're investing on a potential, on a promise that investors are, on the founders are bringing. And now if there's only one founder, number one, it's extremely high risk. And secondly, is that one founder does not have the capability to run a whole company, right? So
that's definitely a no. I said we can do key man's insurance for the invested amount, but that's okay. Last question. Yeah, go ahead.
No, I have a different view. I don't care whether you have a co-founder or not. See, Ritesh Agarwal, he's one of my very dear friends, and he's built an entire company without any co-founder. Vijay Shekhar Sharma has built. There are a lot of examples. See, the idea is if you are a control freak, because see, majority of startups fail because of founder conflict. So if you are, I think they're.
So are you calling Ritesh and Vijay both control freaks?
No, not
exactly.
No. They might be, but the whole idea is that I believe that you should have the ability to attract the right talent and have a founding team. Not necessarily you can have, and you can generously donate ESOPs and build the entire stack for yourself, but not necessarily my opinion.
Sure.
Hi, my name is Uni, and I am a founder of an edtech company as well. So my issue is same that I am running it as a solo, but the point is extending to it, how much equity should we evaluate? Because if we do maybe a co-founder or maybe we get some investors along, so what should be the percentage equity we should evaluate?
Yeah, there's no right answer, as we already have a disagreement amongst us. I honestly feel it should ideally be at least 1/3, 2/3, but there's no right answer. Could be, depends on what everyone is bringing on the table, what is at stake, and it varies from anything to anything. But you need to have a good team, and I agree with Ritesh here. And Padmaja also actually means that only. Whether it's co-founder or it's a good CTO, CMO, all those things are very, very critical, and ESOPs are in place, and the person who's founded it has a lot of experience and has a lot of money. Take it beyond seed stage to the next stage, even if they don't raise money, because that will be a challenge.
That is what the challenge comes, because
I agree. So it will see. As soon as you send us a pitch, single founder, वो हमारा red flag होता है, उसको side में कर देते हैं एक बार. So you need to then come through a 10 referrals for us to see why you are a Vijay Shekhar or a Ritesh Agarwal. That's putting it in light and humor. Yeah, go ahead. Education pedigree matters in the co-founders? In the founder. So basically he's talking about if I am an IIT, IIM, would you look at me at a higher valuation?
What is the scenario in that?
What is pedigree का क्या मतलब? You
non-lead institutions.
Go ahead.
I can give you a very candid response. मैं तो अपनी company बेचती है, so I can actually tell all of this. I come from a very downtrodden MBBS college in Tamil Nadu. I tried raising my Series A from everyone in the country, and no one backed me up. And I realized that education does matter a lot. I've realized that people from IITs, people from Harvards definitely get more preference. But उनसे ऊपर preference होता है second time founders का. जब एक बार company बेच दी, अब सारे VCs आते हैं कि यार अब आप क्या अच्छा कर रहे हो and we back you up. So I think the most important thing is your track record. Obviously IITs help, but सबसे ज़्यादा आपको हेल्प करेगा आपका NPS and your customer. The more and lastly I feel that the more you hustle, you'll eventually make your point, and I think all these are obviously you will get a first mover advantage for your educational degree, but in the long run it won't matter.
Thank you everyone. Offline हम बाहर आ रहे हैं. जितना sir, thank you.
Thank you so much for ending on time, and those are some great perspectives on the PE VC ecosystem and how it's changing. The change is the only constant, right? And it's survival of the most adaptive, not the fittest. And it's time to express gratitude once more. So to do the honors, may I please invite on the dais Mr. Brahm Alreja, Charter Member, TIE. Ladies and gentlemen, first up, acknowledging Ms. Rupan Aulak, Managing Director, Pi Ventures. तालियों बजती रहनी चाहिए. Next up, Ms. Padmaja Ruparel, Founder, IAM. And Mr. Arjun Rao, General Partner, Special Invest. Dr. Ritesh Malik, Founder, Laksha University, and Founder and CEO, Innovate Co-working.
also a sector that no one mentioned is sustainability. ये चाइना की ट्रॉफी और ये सब डब्बे वब्बे देने बंद करने चाहिए. I think we should give simple things which are environment friendly and not. We get this on a daily basis. I strongly feel that we should change it to the next icon. Thank you.
Food for thought for the team. And our moderator, Mr. Mahavir Pratap Sharma, chair of Thai India Angels and Rajasthan Angels. अपने लिए तालियां नहीं चाह रही हूँ, but हमारे पैनल के लिए, please let's give them a louder round of applause. Thank you so much, ladies and gentlemen. And it's now time to get on board an international flight or flights that depends upon you.